In today's video, I want to teach you a trading strategy based on moving averages, which is very easy with high degree of accuracy. With this strategy, you can simply discover when a trend is forming so you can ride on the trend and make a big profit. Without wasting any more time, let's get started. This trading strategy can be used on time frames like 15 minutes, 1 hour, and 4 hours. The best time frame for this strategy is 1 hour. So here we set the chart time frame on 1 hour and we continue on this time frame. This strategy can be considered a swing trading strategy because our positions can remain open up to several days depending on the market situation. So please watch this video until the end because I will explain some important points regarding swing trading. This is the price chart of euro to dollar of forex market, but there is no limitation on the asset or market, and you can use this strategy on any other asset or market, whether it's forex, crypto, or stocks. In this strategy, we have 5 moving averages. For adding moving averages, here we click on indicators and we search ribbon. This one, moving average ribbon. We added ribbon to our chart because it has 4 moving averages and it's easier to manage them here in its settings. 4 of them should be simple moving averages, and for the first 2, their length should be set on 20. For one of them, the calculation is based on low price, and for the other, based on high. And we set their color as blue. For the next 2 moving averages, their length should be 5. For one of them, the calculation is based on low, and for the other, based on high. And we set their color as red. Everything is done here, and we click on OK. As you can see, we have 2 channels on the chart. A red channel that is moving closely to the price, and a blue channel that is moving a little further from the price action. We must add another moving average to our chart, a simple moving average, and here in its settings, for the length, we set it at 200. And let's make the color as green. Alright, everything is already set on the chart, and let's see how we trade based on this trading strategy. The green moving average, the moving average with length of 200, helps us with the direction of the market. Generally, when the price is above this moving average, the market is considered to be in an uptrend, and when the price is below this moving average line, the market is considered to be in a downtrend. So we try to take the signals that are in the direction of the major trend of the market. And for this purpose, to find out when a trend is forming, we use these 2 red and blue channels. When the red channel is totally above the blue channel and the price is already above our green moving average, it gives us the signal to enter a long position. When I say totally, it means that both of these red lines should be above the blue channel. For example, you can see that at this point, both of red lines are above the blue channel. So when this candle is actually closed, we enter a long position as this new candle is opened. So we can enter a long position here at this point. The stop loss for this trade can be placed below our green moving average line because moving average with length of 200 is a strong support here, so below this level is a good place for setting our stop loss. But you must also consider the volatility of the market, especially in cases when your trade entry is close to this green moving average line, because you may leave your positions overnight. So you may consider a wider stop loss, for example below the swing low, so you can be sure that your stop loss will not get hit because of some normal volatility of the market. By doing this, you actually give more room to the price action in case if it's moving against your position. In this case, placing our stop loss here below the moving average with length of 200 is a logical place by considering our trade entry, which is here. In this strategy, there is actually no hard rules for setting a stop loss, and it totally depends on the situation of the market and how far is your trade entry from the green moving average, which is actually moving average with length of 200. We'll explore more examples, so don't worry about this. And for the profit target, we close our position when the red channel crosses below the blue channel, which happened here after 3 or 4 days. So this position is closed at this level with a good profit at risk to reward ratio of 2.6. This crossing of red channel below the blue channel is not a confirmed signal for opening a short position because the price is above the green moving average, as you can see. Any crossing above the blue channel in this situation, which the price is already above the green moving average, confirms that this is a pullback and provides us another opportunity for opening a long position. Let's move backward to show you something here. Here at this point, you can see that the red channel is totally crossed above the blue channel at this point with its candle forming here, and the price is also above our green moving average. So we could enter a long position here at this point. But if you pay attention, you can see that shortly after this, the red channel crossed below the blue channel here at this point. So we should close our position here at this level, ending with this much of loss. Even if we set the stop loss for this trade below the green moving average line, for example here, and we don't close our position here, at this point, our stop loss would finally get hit, ending up with a bigger loss. The important point is that when the price is newly crossed above the green moving average line or below this line in case of short position, it's better not to enter a trade when there is a trading signal. This trading signal has a higher risk because when the price crossed above MA 200, it doesn't necessarily mean that the price is going to advance instantly. And most of the time, like this case, the price goes to a trading range. Some pullbacks and even maybe multiple crossing may happen. So when the price from one side of MA 200 crosses to the other side, if instantly there is a signal, it's better not to take it. If we move backward a little bit more, you can see that a similar situation happened here. The price, after being above the green MA 200, here crossed below this line, the moving average with length of 200, and at the same time here we had a bearish signal. The red channel totally crossed below the blue channel, but you can see that this was also not a good signal. Here in this part of the chart, you can see that after this crossing of price above the MA 200, not an immediate crossing of these two channels. The crossing actually happened earlier when the price was below MA 200, and here we got a bullish signal. The red channel is totally above the blue channel here at this point, so we could enter a long position here at this point. The stop loss for this trade can be placed below the swing low, and the profit for this trade could be taken at this level where the red channel crossed below the blue channel. So it could be taken here. Not a very profitable trade, very low risk to reward ratio, but still closed in profit. Moving backward on the chart, here also when the price crossed below the MA 200, we didn't have any bearish signal instantly here, not also here, and we got one here. The red channel is totally crossed below the blue channel at this point. So we could enter a short position here as the new candle is opened. Because the trade entry is very close to MA 200 line, we could set our stop loss here above this high. Could be a reasonable place here. But the thing that has happened here is that shortly after this, the red channel is crossed above the blue channel. So we close our position here with loss. This was not unexpected. As a trader, you must expect this because you can clearly see that the price is in a trading range. The market is flat, but we're trying to catch the starting point of a trend. Shortly after this, you can see here we got another signal. The red channel totally crossed below the blue channel here. So we can enter a short position here as the new candle is opened. The stop loss can be placed above the swing high here at this level. And the profit of this position is taken when the red channel totally crosses above the blue channel, which happened here at this point. So we can close this position in profit at this level. Big profit, as you can see, with a good risk to reward ratio. Please pay attention that you can also take your profit based on price action analysis. For example, one may find out that here at this point, this is an exhaustion move from the bears. So this is the bottom of the market, or here more confirmation that a bottom is forming here at these levels. So please pay attention that you must always watch the price action carefully. And because your position may remain open for several days, you must also pay attention to fundamental factors and news that may affect the price. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.